Okay, so absolutely flat trade. Mid caps are selling off a little more than large caps for the time being. So what to do in a market like this? Let's ask Rahul Mohindar of ViraTechIndia.com. Rahul, good to have you on the show. As always, all these mega events are out of the way and the market's completely flat. So what to do now?
I think part of the answer was gotten yesterday. The market was so range bound, between the 17,100 to 17,150 level. And I think traders are wanting to see the market, break through this zone. And if you're a short-term trader, what are you watching for today? Can you sustain above 17,150 and then move towards, 220 to 250? That's the real block hole. If you look at the last couple of weeks, 17,200 to 250, that's kind of the medium-term block hole, if I could put it that way. That's going to be the major breakout per se. But I think if I was a day trader or if I was a very short-term trader for the month of March, I would still say that, look, hold on to long positions, keeping a 17,100 stop loss. We have much better odds of getting to 17,220 in terms of a price target. If I look at the Nifty Bank, the level I would be very careful from a slightly bigger perspective would be 39,600. That level should not be breached. We're still safely above that. And I think that's, where I feel that the market should get stronger from here. In terms of some stock specifics, before I come to trade ideas, just to lend to this index call of mine, I'd say two very important index heavyweights that I'm watching are Reliance and Unilever. 20 to 30 on Reliance is a very strong support, and 24.50 on Unilever. These are both levels one should watch carefully. Hopefully, we don't break these levels and we've kind of locked in a short-term bottom. So I think these are two levels which I'm going to suggest we watch even on these individual stocks to get that lead picture on the index. But coming to some trading ideas, I think technology has the greatest potential to kind of break out from here. And I may be early on this, but I clearly think that, after a good 13-14% correction on TCS from its peaks of February, we have finally probably looked at some kind of a base building formation. My sense is if you could buy now with a 3,100 stop loss, the odds of seeing 3,205 are highly likely. In the banking space, Axis Bank, I would use these intraday down dips to buy around 850, 855. Keep a stop loss at 847. If the stock really can break out from here, we could go all the way up to even 880, 885. So Axis Bank would be my pick within banking. And lastly, Bajaj Finance. This one could be a dark horse. We've seen a nice, clean, straight line move if I look at an intraday time frame. And I think we are probably headed to 6,000 plus levels on the stock. Keep a stop loss of 5,800 and go long on Bajaj Finance would be my call.
Rahul, thank you very much for that. Just to take the point forward on the technology names out here in India, the Nifty IT index is still down